Ladies and gentlemen, good day and welcome to the Q1 FY2024 conference call of Fairchem Organics Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Anuj Sonpal from Fairchem Advisors. Thank you, and over to you, Mr. Sonpal.
Thank you. Good morning, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Fairchem Advisors. We represent the investor relations of Fairchem Organics Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the first quarter of financial year 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, I would like to introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Nahush Jariwala, Managing Director and Chairman, and Mr. Rajan Jhaveri, Chief Financial Officer. Without any further delay, I request Mr. Jhaveri to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj bhai, and good morning, everyone, and welcome to our earnings call for first quarter of financial year 23-24. Let me first start off by giving you some of the key financial highlights, after which our CMD Nahush Jariwala will give you some of the operational highlights. For the first quarter, the revenue from operations stood at 161 crores. EBITDA for the quarter was nearly 12 crores, and with EBITDA margin at 7.29%, and we reported a net profit after tax of approximately 6 crores of rupees for the quarter. Now I request for CMD Nahush Jariwala to brief you on the operational highlights for the period under review.
Good morning, everyone. The revenues were impacted due to possible destocking by a few of our customers, mainly triggered by continuous fluctuation in commodity prices coupled with dumping by China. In fact, I would like to say that there has been increase in volume processed by us on quarter-to-quarter basis by 3.2%. Additionally, the company incurred various expenses in development of isosteric acid, the new product what our company has launched. That was more related with some loss of material that happened while testing. Some job work charges also were incurred for the trials of intermediate stage, and additional utility costs for settling the new product. And there also was one-time cost incurred to reach compliance registration, which is needed if we want to export our material to European nations. I would like to say that we have successfully manufactured isosteric acid on the plant, and the samples have been approved by the top companies in US and Europe, and also in Japan. Now we are waiting for the stability test, which is a must, as these products will have a shelf life of more than 1 year. The companies who will be buying these products will have to undertake a stability test. And so once the stability tests are over, we'll be able to start manufacturing the material on regular basis. We are just waiting for the stability test results, which might take some time. But I would like to say that we have been the only company in India which has been successful in manufacturing isosteric acid, and will be one of the top 5 companies in the world. I mean, that is from my side as regards the new product and the reason for some drop in overall profitability. Now I would like the floor to get open for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prakash Kapadia from Anived Portfolio Managers. Please go ahead.
Yeah, a couple of questions from my end. Last quarter we were pretty confident of growth, coming back, and, we saw the year being on a good note, and Q1 and Q2 and demand scenario look good. So, can you help us understand slightly better, because if I look at sequential basis, sales are, are up by 5-6% at 1.6 billion. So, what is really affecting this, and specifically, the gross margin trajectory? Again, we've seen, a 600 basis points fall in gross margin. So what is happening on the raw material front? And, you've been maintaining and talking about volatility in commodity prices. So, post-COVID, if, on investor presentations, if you can plot, key raw material trends and, what is happening to the price impact, it'll be better for us to relate to the volatility, because it's very difficult for us to understand what is happening on a directional basis.
Okay, good point. This as regards the presentation, we need to put something on our website as regards the raw material trend. What we do is our raw materials are based on, the pricing is based on the pricing of vegetable oils. And similarly, our finished products are also sold on basis of vegetable oils. So what we'll do is we'll put chart which indicates what have been month prices on quarterly basis of different
yes, so maybe an indexation of 100, it was this or this, at least it will be
100%. Very good suggestion. As regards your second question, that we were pretty confident about our working, and when on the May, when we had a conference call, then let me tell you one thing. April, May, the working was good. We never expected any drop to happen, but in the month of June, suddenly there was a drop in demand, and that is something we are not able to really predict what our customers would do. But I can say one thing for sure, that we haven't lost any of our customer, and neither new competition has come in. In fact, in current month till date, things current quarter till date, everything looks good, and we are keeping our fingers crossed that they will continue the way they have been behaving.
Yeah, as far as the drop in margin is concerned, we already given a few reasons for the same in our investor presentation. But broadly, I will give you the reasons. The trials which we took of monobasic acid to make isostearic acid, the loss on account of that ranges anywhere between 1.5 to 2 crores. Then we had these settling utility costs also, then outside job work charges also. Then we also had these commodity price fluctuation and these one-time legal cost of reach compliance. These approximately was approximately 45 lakhs or so. And on top of that, as Naudi said, we had not anticipated the fall in revenue in the month of June. The fall in revenue against our expectation was to the tune of 10 crores of rupees. And considering an average raw material cost of 75%, because other costs more or less are same. So our margin was impacted by approximately 2.5 crores on account of this drop in sales in the month of June only. So that was not anticipated when we do that call on 31st May or 1st of June. So these all put together are the reasons for the fall in our EBITDA compared to immediate previous quarter. As far as our volume is concerned, on a Y-on-Y basis, the volume is higher by 3.2%, and on a Q-to-Q basis, the sales volume is higher by approximately 18%. So as we said, we were expecting still higher volume, but then because of this June impact, it did not happen. July has gone up reasonably well. August, as of now, indications as on this.
Hello.
Participants, please stay connected. We seem to have lost the line for the management. Please stay connected while we reconnect the line for the management. Ladies and gentlemen, please stay connected while we reconnect the line for the management. Ladies and gentlemen, we have the line for the management reconnected. Over to you, sir.
Yeah. As far as isostearic acid is concerned, we remain quite optimistic, and let me on behalf of Navusdi assure you that we have been able to make of course it is under approval, but we have been able to make isostearic acid, though we are the 5th or 6th company in the world only, in a very, very cost-effective way. And once our commercial shipments start, it can go a long way as far as our company is concerned.
Yeah, okay. So there is no reason for us, to change that direction where, 700 crore plus kind of revenues with stability in margin should happen for the rest of the year.
No, I don't think so. Any change, any knee-jerk reaction is needed at this stage. Not at all.
Sure. And lastly,
we are not able to really understand how China is going to behave. There is massive dumping from China, and our dimer, which is one of the main products, we have to retain the market share by hook or crook. And that's exactly what we are doing, because it took years for us to reach a market share of 75% from 25%. Now at this stage, I don't want to lose, because China is dumping and I just want to give them way to sell more and I sell my material. No, that's not the thing. We are going head on.
Yeah, so even though it results into lesser margins, we want to retain our market share.
Okay. And lastly, from my side, sir, if you could give us some sense, as we've expanded capacity, how much of, sales contribution is from paint, and is there a relation between consumption of linoleic acid and dimer acid? Are both used in a certain proportion, and, directionally, how much should paints be as percentage of our sales?
Between linoleic acid and dimer acid, in terms of value, it comprises approximately 74 to 75% of our total sales.
Right.
And from the linoleic side, it would be close to 49-50%, and from dimer, it would be balanced 54-25%. And now we have earmarked these two things. Linoleic acid is from one stream of raw material, and dimer acid is from another stream of raw material.
So what I was trying to understand, paints as an end user would be what, 50% of our overall sales as of now or on expanded capacity?
Yes.
And second largest after paints would be what, inks industry?
Yes, this epoxy hardness is dimer polyamide industry.
Sorry, I didn't get it.
Mr. Javeri, your line is not clear.
I don't hear anything. No, sir, it's still echoing.
Now you can hear?
Slightly better. Yeah.
Now?
Yeah, we can.
Yeah, basically epoxy hardness.
Okay. So what I was trying to understand, sir, say if paints is around 50% plus of our sales, inks would be what? 15-20% of our sales is what I was trying to understand.
No, ink and paint together is 50%.
Okay, ink and paints. Okay.
Yes.
Okay. Understood. I'll join back if I have more questions. Thank you.
And paint is decorative paint, huh?
Yes, decorative, not the industrial segment.
Yeah.
Okay. Thank you.
Thank you. Before we take the next question, we'd like to inform participants that in order that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Rahil Dasani from Smart Sync Services. Please go ahead.
Am I audible? Am I audible? Hello.
Yes, sir, we can hear you.
Okay. So I have a few questions. I'll take them one by one. The first question is, in a time when entry barriers are reducing for several industries and new players with stronger and better technology are taking a market share from the...
Echoing is happening. Excuse me, echoing is happening. I'm not able to hear.
Yeah, am I audible?
Clearly.
It's fine now?
Now, yes.
Okay.
Yes.
So the first question is, in a time when entry barriers are reducing for several industries and new players with stronger and better technology are taking a market share from the old ones who went obsolete, why have our R&D costs been so low? It is close to 0.0003% of sales. So do you plan to increase it? How are you planning to get future ready and protect your future revenues? So basically it's a three-part question. Why are the costs so low? Do you plan on increasing it? And
R&D, we have been doing this R&D, this stearic, everything is developed in our R&D only. But this is not a pharma company, this is a specialty chemicals company in a niche segment company where we are specializing.
Okay. So are there any new products in the pipeline which you are currently developing right now? Hello?
Please stay connected. We seem to have lost the line for the management. Please stay connected while we reconnect them. Participants, please stay connected while we reconnect the line for the management. Participants, thank you for patiently holding your lines. The line for the management is reconnected. Over to you, sir.
We are very sorry. The line is getting dropped because we are in a distantly located factory and we have our office also at the factory only. So this is the thing we have to keep in mind. Anyway, we regret for this dropping of the calls second time also. Yeah, you can go ahead now.
You were saying we are not a pharma company regarding the R&D cost.
Yeah. So as far as our R&D is concerned, we are not conserving the resources by not doing R&D. Whatever is required for R&D, we are spending on that. And because of that only, we are at this stage of isostearic, we are the world's fifth or sixth company only in the world to make isostearic acid and the first Indian company. And even China has not been able to make isostearic acid as of now. So only by increasing the percentage spending of R&D, we would be able to make better products or more products. That is not the case.
Okay. So the second question is, as you already said, shipments are started for isoteric, the trial shipments, I guess. I missed the first part. So what sort of margins are you expecting there? Second of all, how have the customer reviews been till now, and what is the total sales contribution you are expecting from this product?
Initial sample approvals have happened at all the companies where we have sent the samples, both in lubricant industry as well as cosmetic industry. But now we are waiting for the stability test results. As all these products are being used, where the shelf life is of utmost importance, right? So the companies would have to undertake stability tests, which might take some time. Otherwise, everything is through with it. Once we get the stability test results, because initial purchase orders have also been received. It's not that we are waiting for purchase orders also. So if the thing is at till that level. So I mean, we are just waiting, keeping sitting tight. Once the results are out and we receive it, we'll start shipping the material.
And the incremental revenue from this isosteric acid is expected to be around rupees 25 crores per quarter. Incremental revenue. Instead of selling monobasic acid, we are now making isosteric acid. So that incremental revenue on account of that per quarter, per 3 months, is expected to be around 25 crores.
Okay. So just in continuation to this, you have said isosteric is a forward integration of monobasic. So are you like completely backward integrated or are you buying some monobasic? And secondly, if you are completely backward integrated, do you still have some monobasic left to sell it outside?
No. The monobasic acid company has been making or company has been generating since last 20 years. Whenever we make dimer acid, which is our prime product as discussed earlier in the call, monobasic acid is simultaneously generated. When we make dimer acid, monobasic acid is as a co-product is simultaneously generated. And since last 20 years, we have been selling this monobasic acid. Since last couple of years, we tried to make a further value-added product from this monobasic acid. And we have now reached this stage of making of isosteric acid. So, of late, we have stopped selling monobasic acid and earmarked that monobasic acid quantity for making isosteric acid.
Okay, so
I said incremental revenue.
Okay, so basically you are not buying any monobasic from the market, right?
No.
It won't be available.
It is captive consumption of our monobasic acid. In the market, in India, no one makes dimer acid and monobasic acid apart from us. So it is not available within India also.
Okay. So I'll get back in queue for my rest of the question.
Thank you very much. A reminder to participants to please limit your questions to 2 per participant. The next question is from the line of Preet Nagarset from Wealth Finvisors. Please go ahead.
One question I had, Nausbhai, was regarding that the margin guidance that you had given at the start of the year was, say, something around 14% for the full year. Now, given that volumes will be maintained, but with China dumping, those margins may not be sustainable. Do you have a sense of what could be a sustainable margin that we should expect?
If the dumping from China stops, immediately it will roll back to the 14-15% level. See, as I explained earlier, I mean, I don't want to lose out on the market share. And for that, I would try, and no one is going to pay me any higher price compared to my competitor. So, I mean, that is the situation. It's a cat and mouse situation for us. I mean, whether to sell less at a higher price or to maintain the market at whatever price till the Chinese dumping stops, which I feel might take maximum 2 quarters. And see, because even the government would have to do something about this, because all the specialty paint companies are suffering like us.
So what should we, assuming the Chinese dumping continues?
7.5% and 10% surcharge, so it is effectively only 8.25% is the custom duty. So if China subsidizes this product to a substantial extent, then these Indian companies will be forced to bring down their price if they want to maintain their share, their quantity share.
Right. So my question was that assuming that this continues, we should expect similar margins in the forthcoming quarters that we saw in this first quarter?
It should be better than first quarter. It should be better than first quarter.
And with isosteric thing coming, whenever it comes, once this stability, as Nausbhai said, stability test, etc., gets over, and then that would help us in improving the margin, irrespective of this China factor for dimer acid.
Right. The stability test that you mentioned, is that something that you have already completed at your end?
We have completed at our end, but it is the customer who they'll make their product and do the stability test. We have done stability test of isosteric. I mean, the product stability test only the customer can do.
Okay. And how much time will it take for them, say roughly? Say another 2-3 months for this?
Yeah, maximum, I feel so. 2 to 3 months max, that's what we feel.
And how much ramp up would you need to start the incremental the production on?
Zero ramp up, everything is ready. We are just waiting. All plant is ready. Everything is ready, everything is in place.
Including the entire team.
People, everything is there.
Right, wonderful. Okay, thank you.
Thank you. The next question is from the line of Tanika Agarwal from Green Portfolio Private Limited. Please go ahead.
Am I audible?
Yeah.
So when we talk about the top line getting impacted or due to the restocking by a few customers, so could you talk about was it the export revenue that was impacted more or was it the domestic market?
We did not get you correct.
Can you speak a little bit away from your phone call? Maybe?
Instrument.
And repeat the question, please.
So I was asking, like, when we say that the top line was getting impacted or got impacted in the quarter one due to this restocking by our customers, so was it the export revenue that was impacted more or was it the domestic revenue?
Domestic sales, yes. Export anyway is very less. In the presentation, we have given the bifurcation of domestic and export. I think export sale is 4% only, and domestic is 96%.
Okay. And also, when you say like to retain our market share for like due to this anti-dumping from Chinese players, is it fair to say that our plan to sell through this aggressive strategy adopted by the Chinese players is to be a price taker only?
No, it makes sense for us to maintain the market share. That's what we feel.
We are in this business since last 20 years. In 2002, we are in this business of primary acid. And this Chinese competition might have come in about 10, 12 years or something, 12 years or so only.
Understood. So basically, to retain our market share, we are just playing along.
Yeah, pricing mechanism.
Because if you really look at it, our raw material cost has gone up from average around 72% to around 82%. So that is the only impact. Because we have, raw material, we had to bring down our finished product prices. That's the only thing. Otherwise, there is nothing. Everything else is under control.
All right. And so when we talk about this isosteric acid, can you talk a little about the opportunity size for this product?
Opportunity of isosteric, it's really a wonderful product. It goes in making of biodegradable lubricants and cosmetics. And we'll be working at full capacity. Okay. We have created the plant of matching capacity.
And what would be the overall market size for this product?
Oh, we will be hardly 5-7% of total world's market.
At our full capacity utilization also we will be 5-7% only. So we are not anticipating any difficulty in selling this 5-7% or taking a market share of 5-7%.
Okay, understood. So for this isosteric acid only, you also mentioned that you have stopped selling the monogastric acid. So what was the revenue you were getting from the sale of the monogastric acid?
As I said, 74-75% comes from two prime products, this linoleic acid and its co-products, soya fatty acid and dimer acid. Balance 25%, approximately 4-5% is from nutraceuticals. So that leaves approximately 20%, and that 20% comprises of everything. Monobasic acid, palmitic acid, other fatty acid, residue, everything put together. So individually, this monobasic acid, palmitic acid, everything would be anywhere between 4 to 7% in the range of 4 to 7% or so.
Okay, sir. Okay. Thank you very much, sir. That's all from my end.
Thank you. The next question is from the line of Ashish Upanagavar from InvestQ Investment Advisors. Please go ahead.
Yeah, hi. Sir, if we look at the past 5-6 years, we had a pretty stable business where we didn't see all these disruptions, so-called, what we've seen last 3-4 quarters on the raw material side or on the demand side or maybe on the top line because of the dumping that you're talking about. So this Chinese angle that you're talking about, has this been noticed earlier also where it becomes very aggressive sometimes in terms of dumping and then we have an impact, and or this is pretty new to us? And is there any representations to the government or something that is being made to ensure that the domestic industry is protected, or this is absolutely going to be market driven now?
No, we are too small a company for really us to go and do any representation in government. Basically, if you really look at it, specialty chemical sector itself is suffering. All the companies are suffering. So maybe someday government will have to act based on that situation. And we have never seen this type of dumping happening from China. This is something which has started since last couple of months.
Earlier disruptions were on account of these, you were talking about last 4 quarters disruption, etc. Earlier disruptions were on account, started with this Ukraine war in February 22, and the lot of volatility in vegetable oil prices in previous conference calls also.
Right, we are aware of that, sir. Yes.
The vegetable oil price had increased from 80 to 160, then again it fell to 120, then again rose to 140, and then again 90, etc. So this dumping of Chinese is the latest phenomenon only.
Since last quarter it started.
Yeah.
And you mentioned that July, August have been better, but that you're talking about the volumes sales rather than the overall business margins and stuff.
August is just ended only. We are hoping that August is also going.
July, August, yes, we are volume wise, and we are keeping our fingers crossed. Till date it is normal.
No, volumes are normal, but the pricing is still under pressure. Is that
pricing are obviously they are affected. In that something, as I have been explaining, I want to retain the market share. I won't lose market share. Because later on to regain that would be a tough thing.
Okay. Sure, sir. Thank you so much.
Thank you. The next question is from the line of Bhavesh Chauhan from IDBI Capital. Please go ahead.
Sir, again, with regard to this Chinese dumping, how are we so confident that they are dumping and they are not cost competitive?
Because nothing is coming from Europe, and all these years we were able to maintain a market share of 75% and still making money. So that is in fact that is the proof of the pudding. And even at this price, we are not losing money.
They are taking beating on their margin.
Or maybe there is some government support, or maybe they are unwinding their stock position. We don't know anything. That is that. It's not because our yields are nearing what theoretical possible yields are there. Everything is on line with that. So, it doesn't, we are fairly confident that it's not any technological edge because of which they have able to sell at a lesser price.
Yeah. And sir, what if China keeps dumping, let's say for next 1 or 2 years, because in steel industry we have seen that they spoiled the world market between 2009 to 2020. And if this kind of thing continues in chemicals also, what is our way out of this?
See, we have started making isosteric acid. That is one thing which will give us added, as it is a co-product of dimer, it will help us because it's a product which is going to give us a better margins. So overall, we will be better placed. That is our strategy. I mean,
annual volume rise of 7-8% also would help us. Our other costs more or less will remain same. So that will also help us in improving.
And see, I don't think government would let chemical sector die. I don't think so.
Yeah. But this new product at peak, how much can it contribute to total sales?
Already said that incremental revenue will be 25 crores per quarter.
Okay, sir. Got it. Thank you, sir, and all the best.
Thank you. The next question is from the line of Janvijay Gandhi from IVG Trust. Please go ahead.
Good afternoon, Naushbhai. I wanted to find out, I think you are also developing another biolubricant besides isostearic acid. Can you give us some idea on that product and what is the timeline, process and step required? Does that also require stability tests from the consumers, the companies that you would be supplying? Would they be same as isostearic, the same customers? And what is the timeline for commercialization of that product?
You are talking about the biofuel project?
Yes, sir.
See, currently we are, that biofuel project is ready with us. It's not that plant is not ready, but we are not making because right now the price of vegetable oils are higher than the price of diesel. So it doesn't make any sense for us to manufacture biofuel. So that's the reason. Because that new plant, what we have created, biofuel plant, it was for multiple applications, and one of the use of that plant was in manufacturing of isostearic acid also. Similarly, we are working on one new product also, wherein that particular plant will be used. And whenever it becomes viable for us to manufacture biofuel, we'll start biofuel manufacturing also. In that, no stability or anything is required.
Okay.
Thank you. The next question is from the line of Jagveer Singh from Shade Capital. Please go ahead.
Yeah, sir, thanks for the opportunity. So, my question is related to the margin. So, in the last quarter, vegetable oil prices are low, so our raw material prices are low. Even then, is there any connection between these two things? Can you give some color on this, sir?
Pardon? You are talking about lower margin this quarter compared to immediate preceding quarter?
This quarter, yes, even when the vegetable oil prices are at low, so when vegetable prices are at low, our raw material prices are also very low.
No, that would impact the top line. If vegetable price is low, the top line would be impacted. If the vegetable price is higher, the top line will be higher. But as far as margin is concerned, margin would depend on how the pro rata raw material prices is there and how the finished good prices is there. And as Nauzi already said, that dimer which contributes approximately 25% of our sales in terms of sales value, if for maintaining the market share, we have sold this dimer acid at a lesser price or at a lesser margin, that would overall impact our margin. And further, we have already mentioned in our presentation the other reasons for the fall in margin in this quarter. So, pricing of vegetable oil per se lower does not necessarily result into the higher margin. There are other factors also.
Okay.
Like we took trials, there was a legal compliance cost, there was a utility cost for making of isostearic acid. See, if you are the fifth or sixth company in the world only making isostearic acid, then you need to incur those kinds of trials and you may end up making some losses before finally achieving the result.
And sir, from this new product, so we can see some revenue in the Q4 or Q3?
We are expecting revenue to start from Q3. Now let us hope for the best. As Nauzi said, that we have completed our trials of isosteric acid. Now our customers abroad, they have used that particular sample sent by us. They have made the product. Now they are taking the stability trace trials of their product, which is made from our isosteric acid.
Okay. And last question, sir. We have 1.5 months and gone in this second quarter. So at the current prices, is there any improvement in the margins compared to this first quarter?
Current quarter, we are at 10th of August only, so it is difficult to predict that what is going to be the July-September quarter. But as Nauzi said, July was fairly reasonable, and we hope August also to be fairly reasonable.
Okay, sir. Thank you very much. This is from my side.
Yeah.
Thank you. The next question is from the line of Poojan Shah from Congruence Advisors. Please go ahead.
Hi, sir. My broad question would be on the dimer acid. So if we look at as you said, the market share has been increased from 25 to 75%. So can you just cover the history, how we make it from 25 to 75, how many companies would be there, was there, and now we are the only sole manufacturer. So how industry has been evolved for the dimer acid. Can you just give a broad sense on that part?
See, all end users of dimer acid, they would have both the suppliers. So there is no question of adding the customer or dropping the customers. See, our product goes into B2B segment. All our products go into B2B segment. Suppose we assume that there are, say, 24 end users of dimer acid in India who make polyamides. Now, all 24 customers, or more than that, whatever is the customer number, all of them would be using our dimer acid also, and all of them would be using Chinese dimer acid also. It is a question of we gradually replacing, penetrating and increasing our market share in their overall use of the dimer acid.
Yes, sir, I got it. But is that the industry, like as we have seen, the industry has consolidated. So just wanted to know how many players would there, like let's say 10 years back or 20 years back, and how many have quit the industry size because of the not being competitive?
No one has quit the industry. No one has quit. I mean, maybe we would have added double our customer base.
Okay, got it. So, sir, just wanted to know why we are so much we know that the China is dumping. So why are we so much of that having? We wanted to because ultimately after the dumping the price would be the more than what our pricing is, and then ultimately we will again regain the market share. So why we are emphasizing more on the market share and losing the pricing terms? Like what are your thought process on that?
If you had heard our earlier conversation, what we said is whenever we make dimer acid, we simultaneously get monobasic acid. And this isosteric is made from monobasic acid only. Now, isosteric is a very promising product. So, if we want to make isosteric acid, we need monobasic acid. And if we need monobasic acid, then we have to make dimer acid also. And if we need dimer acid also, we have to ensure that the dimer acid is sold also. So, it is entirely linked. This business is entirely linked with each other. And further we want to retain our market share also. So, it is a double-edged sword. We want to retain our market share also. We want to make more dimer acid also, so that we can get more monobasic acid, and so that we can make more isosteric acid. So it is a business decision in the interest of the company only.
Okay, got it. And my last question would be, let's suppose if we are not considering the cost of what we have done for the specific isosteric acid for the samples approval and the other costs which we have spent for isosteric, what would be the impact on EBITDA? It would be, let's suppose, significantly 10% or 20% delta change, or it would be less than that?
No, in absolute amount, I will tell you, because of these trials, etc., we would have lost approximately 2 crores during this quarter.
Okay.
Then impacting our revenue in the month of June, that would have given us an additional, had it not happened, that would have given us additional 2.5 crores. And this legal compliance cost of 50 lakhs. So all these 3 factors put together itself resulted into 5 crores of fall in the EBITDA. and we are not considering these additional utility costs in our plant or the job work charges which we paid to for a couple of intermediate trials which we took outside, etc. Had all these things not happened, or means other words, had we not undertaken these isosteric trial, etc. itself, then our margin would have been more or less what was in the immediate preceding quarter. But we are looking for the future, for the better future. And for the better future, you need to bear some loss in 1 or 2 quarters, and then only you will get this better future.
Yes, right. Absolutely correct. I got your point. Thank you so much. That would be from my side.
Thank you. The next question is from the line of Rahil Dasani from Smart Sync Services. Please go ahead.
So my question is, as you know, your linoleic acid is used in the paint segment. So are there any substitutes for linoleic acid overall?
Yes, vegetable oil itself, prime oil, refined soybean oil.
In direct substitution to linoleic acid, right? No further production of vegetable oil.
Yes.
Okay. So, and the second question is, your employee costs have been reducing since 2020. So what has been the cause of this? And are you planning to reduce it further, and have we done some automation in the new production capacity?
Pardon? What are you saying? Automation, we have salary cost.
Have we done some automation in the new production capacity, Joby? We have brought in the new plant for the new product.
No. Our overall employee strength would remain more or less same, only at the very bottom level, operators, etc. As and when we increase the equipment, utility equipment or production equipment, only operators and helpers only will increase. All the persons at manager and above level would remain same. They have remained same over a period of last close to 2-3 years, ever since the COVID time only. We have not increased. Though our sales might have increased or in future will increase, the personnel appointed at manager and above level would remain same only.
And second thing is we have 100% on DCS. All our plants on DCS.
Okay. And the last question is just to confirm it, the new product which we were talking about in the last phone call, that's biofuel.
Biofuel, so just now Nausdeep already explained that.
It is not viable at
another speaker inquired about biofuel. Nausdeep already explained that it is not viable as of now. We are ready with that, but as of now it is not viable, and we have simultaneously considered several applications, though the plant name was only given biofuel, but that itself contained several product applications in that, and from that only, partly utilizing that plant only, we are making this isosteric acid.
Okay, got it. Thank you.
Thank you. Next question is from the line of Mehul Chawla from RW Equity. Please go ahead.
Yeah. Just wanted to ask, if you look at the presentations of, Patanjali and Adani Wilmar, both of them have talked about expanding into downstream products and oleochemicals. So is that going to impact the availability of raw material for you if they are also consuming whatever they produce in-house, whatever waste from edible oil?
No, they are, basically as we explained earlier, we have soft oils.
Okay.
And predominantly Adani's are in hard oil, which are palm and coconut.
Okay.
And they already have a oleochemical plant.
Yes. Okay. So do you see, availability of the raw material that you require as a constraint, or it is easily available?
No, we don't see it as a constraint.
Okay.
Only because Adani is further going into this, that is not going to impact the availability of soft oil byproducts.
Okay. Got it, sir.
There are lots of other players also. And we are using all the soft oils.
All the soft oils. Okay. Thank you, sir, and fully support your business strategy of maintaining market share. I think there is a temporary challenging period, but I think going forward, it should help us. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Prakash Kapadia from Anived Portfolio Managers. Please go ahead.
In terms of the tonnage process, I got 3 3.5% year-on-year tonnage process. So it would be around 15,000 tons, right?
Year-on-year.
Sorry?
3.2% is on year-on-year quarterly basis. Q1 of 23-24 over Q1 of 22-23. The volume growth is 3.2%.
Okay, so that should be around 14,900 tons, right?
Sales. We are talking of sales. You are talking of quantity process, or you are talking of sales?
Yeah, quantity processed.
Quantity processed, the year-on-year growth is 2.8%, from 14,000 something to 14,000 something. So it is a 2.8% quantity growth, year-on-year basis.
Okay, fine. Thank you.
Thank you. The next question is from the line of Preet Nagarset from Wealth Advisor. Please go ahead.
Just wanted to understand what should be the gross margins for the isostearic product. What should we anticipate?
It is a value-added product, and the that sample be first approved, and then the price is decided.
But should we expect it to be higher than the margin that we've seen for diamond?
100%. I mean, not in percentage of 100%. I mean, their prices are going to be, margins are going to be higher.
Otherwise, they would not have been talking so optimistically about that.
Actually, you have to understand, that's not a single company in India, and maybe we are the fifth or the sixth company in the world. So obviously, the margins are going to be good.
And should we expect any other trials in this quarter?
Market share initial for getting or for snatching someone else's market share of 5-7%. Maybe we will have to do some pricing strategy. That's all. It's a short-term thing. It's not only a short-term thing.
Sure. And should we expect any further trials in the second quarter?
No. We have successfully made it on plant.
Okay.
And we have stabilized our process. So now we don't, no more trials needed.
And in a very cost-effective manner. Important thing is in a very cost-effective manner we have, and that is why we are so optimistic about this particular thing.
No, wonderful. And I think just like the previous speaker, would definitely congratulate that the management is doing very well in such kind of time. So wish you all the best. Yeah.
Thank you.
Thank you. The next question is from the line of Nirag Shah from Exemplar Investments. Please go ahead.
Yeah, thanks. How much approximate time it will take for us to become REACH compliant?
We are already REACH compliant. We have got it. Yeah, we have got the registration.
Okay, and what is the status of that project regarding new raw material that we are planning to introduce?
It will take some time. Once it is at the pilot plant stage, we'll inform, we'll put it on website.
So, but last quarter you told that by Q4 it is expected to go on stream. So it is on track?
Yeah, well, it is on track, working fine, but still, as again it's a novel product, we are going to be the first company doing it in India. So yes, it might take something, couple of months more. But that's it. We are on track.
Okay. All the best. Thank you.
Thank you.
Thank you very much. That was the last question in queue. I would now like to hand the conference back to the management team for closing comments.
Yeah, we thank you everyone for participating in this conference call Q1. Thank you everyone. Thank you Anuj bhai.
Thank you very much.
Yeah.
On behalf of Fairchem Organics Limited, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.
Yeah. Thank you.